dazzled D Street right now. But Ankur Shah, founder and CIO at Value Investing India as well, joins us on the show right now to talk about what he's feeling about the markets right now. And Ankur, an extremely critical week, this one, considering the BOJ has come and played along expected lines, although not such a positive commentary on the growth outlook. But what is your sense? Next up is ECB. Do you think they too will play as per market expectations?
Yeah, I think it's interesting from a global perspective. You definitely have weakness in the commodity-related countries such as Russia, Brazil, Canada to a certain degree. But if you look at the other major economies, the US, UK, you're still seeing growth. And of course, in India, you're having a pretty strong domestic growth story. So I think overall, from a global scenario, it's not too bad right now.
And, just wanted to talk a little bit about the overall global cues. There's so much that we're anticipating, be it the ECB, the Bank of Japan, etc. In light of all of this, what are the expectations? B, what is it that you're advising clients to do?
Yeah, I think it's interesting with the BOJ actually, not staying on hold, and we were having both negative interest rates in both the ECB and the BOJ. So I think the issue really now is, do you see a pickup in growth? And I think what the BOJ is trying to do is just take a wait-and-see approach, and hopefully growth picks up. The ECB actually in Europe is a different scenario. You actually have some growth, although very minimal, but I think for them it's a similar scenario. I think it's just kind of a wait-and-see approach, and then not being too aggressive on either quantitative easing or pursuing further negative interest rates.
And give us a sense as to what your view is in particular. If we look at the banking sector, there seems to be a whole lot of a mess going on, particularly with some of the stressed PSU banks, given that the NPA levels are now spiraling out of control. Private banks too facing a little bit of a decline. What is it that you're advising one to do when it comes to the banking sector as a whole?
Sure. So I think what's basically happened is that the RBI is mandating that the banks clean up their balance sheets by FY17. And so what you're seeing in the next 2 quarters is probably a lot of pain in terms of provisioning costs for these banks as they address their bad loan problems. And if you look at it's actually really the issue is mostly the public sector banks. If you look at their gross NPA ratio, it's now hit at 7.3% as of December 2015. So I think really the pain is really being focused on the public sector banks and how to address that. And I think, with the recent budget proposal of recapitalizing the banks, I think to a certain degree that's really satisfied investors, and I think it will address the issue going forward.
Soon we'll also have the earnings season as well to look out for. What is your own sense, considering IT is the first of the lot to actually kickstart the earnings season, what we're likely to hear from the IT sector per se in general in terms of the kind of trends they're likely to report?
I think so. If you look at the Q4 GDP number for the U.S., you had 1% growth. So the U.S. economy, to a certain degree, is still growing relatively strongly. And for the IT sector, it's a large. The U.S. accounts for a large portion of the revenues. In some cases, over 50%. So I think you should see some relatively strong numbers across the board, particularly for the companies that focus on the U.S. The Eurozone is a different scenario. So I would expect some weaker numbers from the companies that have larger portion of revenues coming from the Eurozone.
We have seen quite a bit of an FI pull out over the last month, and that did take a toll on our markets quite severely. What's the outlook on how you see the overall liquidity situation shaping up for emerging markets in the, in the remainder of the year, particularly for India?
Sure. I think it's interesting. I think for foreign investors, they really don't distinguish between different emerging markets. So, for example, if there's kind of like a risk-off scenario, they'll pull their exposure from all emerging markets. They don't really distinguish whether it's India, Russia, Brazil, or China. So I think you kind of have a manic-depressive foreign investors at this point. But I think overall, the major economies are still growing relatively strongly. I think the outlook for India in particular is quite strong. You have plus 7% GDP growth, very low inflation, and a low fiscal deficit at this point. So I think the outlook for India is a little brighter than I think people make it out to be, or the market is currently, addressing.
The RBI as well has been coming up with new regulations every day to sort of sort out the NPA mess. What, according to you, should be the steps that should be taken right now in order to clean up this mess once and for all?
I think fundamentally, really what happens is that I think capitalization ratios have to go up for the private sector banks and mostly for the public sector banks. Basically, your tier one capital is the major loss absorbing capital buffer for all banks. And so you really have to address that first before you can get lending growth coming out of these banks. And I think, with the announcement of, 25,000 crore being used to recapitalize the banks in FY16, I think is a good start. And I think that's the right step. Essentially, you want the banks to have a solid capital ratios so that they can go forward and lend more to the economy, and you can see some further growth.
Are you deriving comfort when it comes to some of the, the consumer staples or consumer discretionary sectors? What's the outlook there?
I think the Indian consumer is relatively strong. Actually, if you look at the credit problems for most of the banks, it's really coming from corporates. It's not really the retail customer who has actually a much stronger balance sheet at this point. So I think the outlook for consumer discretionary is still relatively positive. It's actually it's corporate India that's having the issues in terms of credit quality.
Let's talk about, the general view on the Indian markets going forward. Do you think that we are likely to stand strong and outperform the rest of the globe, or do you think that what goes on globally, of course, is going to have implications for our own markets and we won't be isolated?
Definitely, globally, liquidity flows definitely impact the Indian market, and because foreign investor flows are such a large portion that drive the market on a daily or even monthly or weekly basis. But I think the outlook for India is still relatively positive. GDP growth is strong. I think what people are waiting for is now a pickup in the earnings cycle. And I think maybe, you have 2 to 3 quarters of continued weakness, but I think eventually the CapEx cycle picks up. Hopefully bank lending picks up, and you'll see an improvement in corporate earnings.